Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information.
G'day, welcome to the Australian Property Podcast. This is our weekly 2 cent segment with me, Pete Wargent from Alan Wargent Property Buyers. I'm here with Chris Bates from the Flint Group. G'day, Chris. How's things?
Things are good, Pete. It's been quite an emotional week on a personal side here. A few things have been happening that way, but work's been really busy as well. We've got a big team party the next couple of days down in Sydney, and I'm taking the team out to some adventure stuff which they don't know about yet. So they're all trying to figure out what we're doing. But on the personal side, we had a bit of a roller coaster week. My stepfather basically hurt his shoulders about 6 or 7 weeks ago, putting his scooter on its stand on a hill. And anyway, the pain was, excruciating for him. And weeks went on and on and on. And all of a sudden, he ended up in hospital with a massive abscess on his spine. And it was touch and go there last week. We thought that he was going to be paralyzed from the waist down because he did get paralyzed. And they had to operate on his spine, and we got told he couldn't walk again. Then all of a sudden he can walk. So it's been a crazy week. One of those stories that defies, the surgeons are going, hang on a sec, how is this possible? So it was a crazy week for us last week, Pete. I had one moment I was rushing to Newcastle thinking my stepdad is not going to be able to walk again, and then 3 hours later I was told that he can feel his legs. So it's been a big week.
Wow. Yeah, well, sorry to hear that. There must be something about those scooters. My father-in-law in Noosa broke his hip a couple of years back, and similar thing. You worry about as people get older, but he was in and out of hospital in 2 days. I think he was so good he wanted to stay in the level of service. So, hopefully a fast recovery or a speedy recovery there then. What's been happening up here? I've been down in Brisbane this week, just catching up on a few bits and pieces. We've been very busy. We've got a lot of open engagements, and we're doing some commercial deals in New South Wales as well. I think, like you guys, we've actually been looking at office space just a little bit. Maybe it's something for next year rather than this year, because, the market's been disrupted quite a lot by the working from home phenomenon. And, outside of that, just been out paddleboarding and supping, mainly up in Noosa. It's been nice. So, it's an interesting time, though, isn't it? We're sort of halfway through spring now, and we did get that kind of spurt of listings for the spring selling season. But overall, despite all of that, stock levels are still pretty tight. If you're looking for A-grade stock, or even in Brisbane, even a good apartment is hard to find. So, before we know it, we'll be sneaking around to November, December. So are you seeing similar things down there?
Look, I think the start of the spring, so it's bang on halfway through spring right now, but, 6 to 8 weeks ago, we spoke about it lots on the podcast, how the rate expectations changed. They, lower rates cuts are, in the near vicinity, and, it could be some significant rate cuts next year. And that really, I believe, set a bit of a rocket up in terms of an urgency from buyers. We absolutely saw that. And you could see old clients that were interested a few years ago came back to us, etc. But, then the grand finals come and the school holidays come, and absolutely that didn't continue. And I think rate expectations have changed a little bit as well. They're a little bit more negative in terms of, maybe not as many rate cuts. Maybe they're going to be a bit higher for longer compared to maybe 6 weeks ago. And I think a lot of buyers are actually sellers, and a lot of people are saying, hang on a sec, I just want to be certain, and I can't find anything good on the market that I want to upgrade into, so I'm just going to hold. And so I think listing numbers are going to start really drying up. And even if people are selling right now, it's the properties that they aren't that concerned about if they end up leaving, and, it's not their dream home, right? It's not great assets. So, what are you seeing, Peter? You're still seeing quality issues and, really a two-speed market, something that is quite patchy, something that does have a lot of compromises with it. It's really struggling to get a lot of interest, but everyone, as soon as that great property comes on, it's like a seagull to the chip, and people don't want to miss out on it because they know there's few and far between.
It is a bit like that. I mean, this is somewhat anecdotal, but looking around places like New Farm and Tenerife, well, the median days on market just for a unit is about 20 days. But you're often finding in the first open home, you might have 15 or 20 groups through. So, yeah, I mean, stuff is shifting, definitely. One thing I've noticed is more home buyers looking in that market more so than investors now. I think, I think maybe investors are looking elsewhere other than that price point a little bit. But, I think a lot of people in the rental market are finding it's hard work and they'd rather buy if they can. And there's first homeowners grants coming into the picture as well. So, yeah, I think, and further up the price scales, again, if you get something really good, there's plenty of buyers around. I think, a little bit bifurcated, but I mean, just overall, if you look at the total number of listings around the country, it's just not that high. So there's only sort of certain pockets where supplies come on. I guess, as you said, there's a lot of the sentiment is driven by what's happening in terms of money markets, international news, and expectations for interest rates. But just locally, there's just a lot of people looking and not that much supply on the market.
Yeah, I think the sellers are obviously very fearful. If they sell, they're out of the market. They've got to go and find something else. So they want to buy before they sell. But also they don't even want to consider it unless they've got real confidence, right? And I think just in the last few weeks that confidence is sort of reduced again, and that means that you're unlikely to sell. And so I feel like every time there's a little bit of steam building up in the market and sellers are getting more confidence, which then encourages more people to sell and buy, etc. Some news comes in that gives a bit of uncertainty, and then it really squishes any new listings. And we've seen that for years and years now. And unfortunately now, if you don't list your property within the next 3 weeks, like it's going to be pretty brave to list a property in the middle of November. I think just like 2021 and 2022, I think a lot of people are exhausted again. They haven't really gone on breaks and they've worked all the way through. And I think the market will really die over Christmas and nothing will come on again as everyone tries to get refreshed.
Well, speaking of uncertainty, we've got a pretty short election cycle in Australia. It's only 3 years. And the Prime Minister, Albo, had sort of prided himself on never having lost a news poll. But although one swallow doesn't make a summer, that changed this week. There was a news poll showing Labor behind against the opposition on a two-party preferred basis. And I suppose what that does, it sort of increases the likelihood that we get a minority government come May 2025. That's a distinct possibility now. And a lot of the government's housing policy has been centred around this Housing Australia Future Fund to try and build the 1.2 million well-located dwellings. But there might be some more leverage for some of the other parties. So the Greens, for example, want a rental freeze to tackle the rental crisis. And they're also pushing hard for reforms to negative gearing and winding back the capital gains tax discount. So that'll be interesting to see, speaking of uncertainty, because an election cycle will be coming around fairly soon. The opposition's focus has largely been on things like demand-side measures like early access to $50,000 of super for first-time buyers and that sort of thing, which is less popular with economists, but might be popular with some parts of the electorate. So, I think, it's October now, but it won't be too long before we're talking about election campaigning in the new year. So that could create a bit of uncertainty because different policies coming from different sides of politics.
Yeah, I mean, it's going to be, it's all of a sudden we're getting RB in 2025 and the election's going to be all over the news and housing's going to be a big part of it. What else are we seeing? What's our 3 stories this week, Pete?
Well, just before we crack on to the 3 stories, there was just a couple of things internationally. The US inflation figures were a bit disappointing, a bit higher than expected, but markets are still pricing for 2 more rate cuts before Christmas. Nevertheless, I guess the general trend remains down. And I suppose the other thing that caught the eye this week, Gareth Aird of CBA, he's head of Australian economics at Commonwealth. He did his usual monthly analysis, and he suggested that the disinflationary pulse in Australia has really sort of cleared the path for the Reserve Bank to cut interest rates, potentially even in November if we get a soft inflation print. It feels to me like the most likely outcome is the interest rates on hold until the new year. But it was an interesting piece of analysis. He goes through all the usual charts and figures. We'll stick a link in the notes, actually. It's always worth the read. And you can see how the breadth of inflation has really narrowed. There's only sort of some parts of the market where we're seeing big price increases. In property world, it feels like things like insurance, that's where there's really sticky inflation. But in other parts of the market, like rent, for example, we're probably coming back down the other side now. So that was pretty interesting. And then, of course, CoreLogic released its monthly chart pack. Did you have a read of the Gareth Ed piece?
Oh, I didn't see Gareth's piece. I did read the CoreLogic monthly housing report, which everyone should download whenever that comes out. I mean, there was some interesting stats coming out in that, right? We've cracked 11 trillion, which was, it's a big number, bouncing back to what we were just a couple of years ago in COVID. And, 11.2 million dwellings now, but, it's only 500,000 sales. And, I think that number's staying very flat, but we are adding a couple 100,000 dwellings every year. And what's your sort of take on that, Pete? The turnover rate, is it something that people probably should understand a little bit more to really understand how we're living in our homes longer and longer?
Yeah, it's an interesting one. If you went back to the time of the Sydney Olympics, I haven't got the graph in front of me, but the housing turnover rate, i.e. the proportion of the housing stock that sells every year, was about 8%. It was really high. I guess what we've seen since the Sydney Olympics, we certainly went through a massive construction boom around 2015, 2016. So there's definitely a cyclical element to this as well, because obviously if there are more new dwellings to buy, well, people are buying those rather than the existing stock. But then I suppose if you went through until 2019, 2020, well, the housing turnover rate was only about 4%. So as you said, on average, people are staying put for longer, about 10 years, I suppose, on average, and maybe a little bit less for a unit. So I think there's a few reasons for it. I think stamp duty is a big one. I think it's quite a punish to sell a property, only have to shell out another sort of 50 or 100,000 to buy the new place. So I think that's one of the things that has made the housing turnover rate lower than it used to be. But there's probably a bit of a cyclical element here as well. I think at some stage over the next few years, we'll get another construction cycle, and that will filter more new buyers into new apartments and so on. But I guess if you looked at, if you sort of drew a trend line through it over the past 25 years, generally the housing turnover rate has been lower. And I think transaction costs or the fear of not finding somewhere suitable, I guess that sort of made the labour force just a bit less flexible than it might otherwise have been.
Lucky I'm jumping in here, Pete. You were losing your voice. I mean, I guess, I think the way I look at it as well, though, is there's a lot of people are in homes or properties that, isn't where they want to be long term. They're in a 2-bed apartment with 2 kids and they do want something bigger, but the jump's too big, or they're in a 3-bed house that either needs a really big reno, which might not be possible, or they need a bigger house. And I think the more that the turnover rate sort of reduces, I actually think that's really pent up demand in our property markets. Is people do want a property that better suits their needs, but they can't because those jumps are bigger and bigger. To go from the apartment to the house prices have been running faster than apartment prices. To go from the smaller houses to the bigger houses, they've been running at a faster rate. And so, on top of stamp duty, the ability to actually do it now with lower borrowing capacities. And so, absolutely, it could be a bit of a cycle, but it's also a trend that seems to consistently be heading that way. I mean, one interesting thing I think with this monthly report, which I do think people should read every month if you're interested in this stuff, is the low end of the market still consistently is outperforming the middle and the top end of the market. And so the gap between the poorer parts of the market and the cheaper parts and the more expensive parts is closing, and might that gap has been bigger in the past. So it doesn't mean that it's at a point where it's, very like for like, but I do think that's a bit of a good sign for the medium and higher part of the market. When rates of borrowing capacities come back, they are better priced for value for money based on the last couple of years of growth.
Well, absolutely, yes. And let's rip into those 3 top stories of the week then. So, we take a look at Victoria first. There's been some conflicting information and views here. Auction clearance rates are down in Melbourne. Prices are down fairly modestly, but down over the past 8 months or so. And there's been a large drop, I should say, in the stock of rental bonds, suggesting that some investors have been selling up. So Ben Kingsley of Empower Wealth and the chairman of Picker has said that the fall's been driven by 4 main factors: investors selling up due to higher mortgage rates, increased land taxes in Victoria, tenancy reforms that ended no-fault evictions. I think as well, maybe just some investors who've been in the market for a long time and now thinking, well, maybe I should tap out and take my gains. So it's interesting to think how this might play out, because I suppose in theory, rental yield should rise. You should see rents go up a bit, maybe prices come down a bit, and eventually that brings investors back into the market and the market cycle continues. But I suppose there is certainly a sort of a psychology of market cycles, and when prices are going up, more buyers come in and vice versa. And maybe until we get an interest rate cut as a circuit breaker, the market's going to be quite soft down there. But I guess you would know more than me about what's happening in Melbourne and Victoria, Chris. But what do you reckon? I mean, it seems to me that obviously some changes to settings have sort of made it less attractive to some investors, and some are selling up. But is that what's driving the market down there?
Look, I do think there was a healthy proportion of investors in the Melbourne market, which was actually pushing down rents, right? And it was giving renters choice, right? Whether it's the apartment market or even in the housing market. It was quite affordable market and had great long-term growth. And so a lot of investors did go to Melbourne rather than, say, going to Adelaide or, Perth in the past. A lot of investors go, well, I've got a place in Sydney or I live in Melbourne. I'm going to buy another property and I'm going to buy it in Melbourne. And so I do think there was a healthy amount of investment down there. But hang on, when you flip it, like Ben's saying here, and you really attack it with higher land tax, you change tenancy rules, and I think that's part of it. But I also just think it's sentiment, right? So a lot of investors are down there going, hang on a sec, this isn't performing for me. And the market is, not performing compared to other markets. I'm just going to sell. Secondly, also, I've got a mortgage on my house in Melbourne. Cash flow is tight. This negative cash flow on my investment properties really run on me. The higher mortgage rates, I'm just going to sell it. I've also got a higher mortgage rate on my home. I'm also getting hit with all these bills right now. And so I think a lot of people are going, well, I don't really know if I want to hold on because it's taking a long time to grow. And I think that's what's forcing people to sell is the sentiment. However, if sentiment flips and they go, actually, no, there's a bit of growth front in Melbourne, investors won't rush to the X's. They'll hold on and they'll try to ride the wave. And so I think it's a bit of a tipping time bomb down there. And when the confidence returns and Melbourne gets its mojo back, which is probably the one that struggled the most. I think our return to office is the lowest down there and, had the biggest lockdowns and a lot of interstate migration out of Melbourne, which is not usually the case down there. It wasn't long ago when Melbourne was consistently ranking as the best place in the world to live. And so I don't think it's going to be too long until it's got its mojo back. And it's just got such a huge amount of wealth, a huge amount of employment opportunities, and a huge amount of different cultures from around the world that have migrated to Australia. And when other people from around the world want to migrate to Australia, Melbourne is absolutely very high on the list for job opportunities plus also culture. So, and I think Jared McCabe wrote an article. G'day to Jared. Jared's a great buyer's agent in the Melbourne market. I rate the Wakelands team, and they've bought for a number of clients over the years. And he sort of put an article on the AFR saying Melbourne's a good time to buy. And in counter-cyclical, you want to buy something when other people don't think it's a great time to buy, rather than the Perth and Adelaide's right now when everyone's buying there, everyone's paying stupid prices just to get into the market. A lot of that party has already happened. What you want to do is get there very early in the party and try to, and maybe in the Perth and Adelaide story, you try to leave before the party ends. But in a Melbourne, you can potentially just hold on and try to drive it over 30, 40 years because it's got all the right fundamentals.
Well, I'll just quote from the ABC News piece here then. So Victoria experiencing the sharpest rental stock fall since record keeping began in 1999, suggesting an investor sell-off is gaining pace. Number of active rental bonds fell from 676,000 in June last year to 654,000 thereabouts. So about 21 or 22,000 fewer rentals in the market. The state's only ever recorded 2 quarters of rental bond falls, both in 2024. And it does suggest as well that maybe the speed of rental stock loss is also increasing. We talked, I think, 2 weeks ago about the PIPA survey, which showed about 22% of investors had sold in Melbourne over the past year. Now, that's not necessarily representative of the whole market, but it definitely shows that the sentiment has been away from Victoria over the past 12 or 18 months. I think, Ben Kingsley, to wrap up, said if we continue to see 2 to 3% of the current stock leaving the market, we're taking tens of thousands of rental properties out of the market, and it's never happened before. I mean, so it's an interesting test tube or petri dish for what might happen given some of these reforms to land tax. But to Jared's point, I get a lot of people now asking me, well, I've had some really good results in Perth or Adelaide, and maybe the counter-cyclical play is now to invest in the market where sentiment is lowest, which I guess is Melbourne. So, I think if you're taking a 5 or 10 year view, that's the market you want to be buying into. Obviously, in the short term, momentum's going to keep Perth flying higher. So, pretty interesting stuff overall. And Australia does seem to have this more than some other countries. We have different markets operating to different cycles.
Yeah, another buyer that we work a lot with down in Melbourne is Kate Baker. So I just remember a post she just did quite recently. Actually, I think I read in the AFR some comments from her on the weekend, and she sort of mentioned that at the moment she can have the time to actually find good quality assets, AAA assets, right? The time to consider them and the time to actually go and make the offer. That's great buying conditions, where you can actually A, find them, and B, it's not like a real race to sort of get an offer in and a pre-auction offer, or you have to just, go and pay the most amount at auctions, right? I'm not saying there's no competitions on great assets, but just reading it between the lines for Kate and knowing her for, over a decade, that's a real sign that, she plays a very straight back, Kate. So, she calls it as it is. She doesn't, just inflate things. And I think that's, a good snapshot that the Melbourne market, those windows don't last forever. All of a sudden, buyer sentiment shifts, and that easier to get properties moves. So actually now I've got a bit of competition, and you only need a little bit of a move to the needle to go from 2 people looking at it to 4 people looking at it, and bang, you're under strong competition. And then you miss out on one, and then there's another property, and then all of a sudden the market starts to move, and markets can run quite fast and quite hard. And I think sometimes people forget that those windows don't last forever.
Well, that's right. I've spoken to a number of first-time buyers in Brisbane and southeast Queensland and said, well, my friends in Victoria can buy really easily, and it's really hard for us. We keep missing out on properties, and then I've got to go to the next open home and the next open. But that's the market cycle. So let's look at this second news story for the week. So from REA Group, Darwin rents are now higher than Melbourne. So rents may be slowing in pace nationally, but still rising overall for now. Darwin up to $700 a week, which is higher than Melbourne. I used to live in Darwin. It was a crazy market then. It seems like it's turning that way again. I think sometimes you're not really comparing like for like here, because Melbourne has got a lot more medium density stock and high-rise apartments and so on versus Darwin, which I guess the city that was previously flattened 50 years ago is generally a low-rise city, a lot more akin to LA or some other markets where you're more prone to earthquakes and cyclones and so on. Sydney's still the most expensive market, and I guess probably always will be due to the constrained supply. I think the sort of follow-on from this, CBRE put out its apartment vacancies and outlook report, and they're forecasting a rent increase of 25% over the next 5 years because of an ongoing shortage of apartments. And I think just separately, the Department of Home Affairs released the latest temporary visa numbers, 2.75 million, and that's at a seasonally soft time of year. I think when the visitors come back in the summer months, we'll be above 3 million. We've got 680,000 student visas now, which is a record high. And we've got, I guess, it's opening up more pathways for investment from Asia and China. So I think, although it seems that sort of the big picture is that rental price growth is slowing, but the rental crisis hasn't really gone away. It's just kind of changed shape a little bit as Aussies are bunching up again, household sizes are increasing, but we haven't really tackled the underlying issue, which is the shortage of housing.
I do love these clickbait headings from journalists, and I do speak to a few journalists from time to time, and I love how they're sort of dig for a story and a headline and a grab from you, and you sort of almost got to play the game sometimes to give them something that's actually going to fit into a paragraph that they put in a report. I think that's one of the situations here when people would love that as a grab. Darwin's much more expensive than Melbourne, but you're right. Then you got to go down the compositional bias and look at the Darwin market and the Melbourne market as the houses, apartments, inner ring, outer ring? You know, are you comparing like for like? And a lot of people do this around median prices as well, like the median price. Well, that doesn't mean you're comparing median houses across the country and median houses. And you know, the Melbourne market's just huge, right? You've got everything from the affordability to the $40 million, you know, luxury mansions in Toorak. So, yeah, you got to be really careful with these articles that are pulling data because they're definitely great clickbait.
Well, that's right. I mean, when I lived in Darwin, I lived in Winnelly, which it felt like it was, you know, down near the showground and the Air Museum, and you felt like you were a million miles out of the city, but it's actually 8Ks, you know, like whereas 8Ks out of the CBD of Melbourne, well, you're kind of in a very handy sort of middle ring suburban area with good access to the city. You're not really comparing like with like, even within the sort of houses and units disaggregation. But yeah, still pretty interesting. I think, yeah, the pressure is still on, I think, to cut student visa numbers. But I think that takes time to flow through. So, I mean, it suggests to me, though, that if you think about around December time when we've got 3 million temporary visas, there's going to be a lot of busy hotels, a lot of busy Airbnbs, adds back demand to sub-rentals and so on. So, yeah, I think it's, yeah, I mean, I think we've seen probably the peak for inflation in rents, but the pressures are still there. I think it's one of the things that we found is pushing a lot of first home buyers into the market rather than staying in the rental pool. Is just that it's actually it's not a great place to be as a renter at the moment because there's a lot of competition for good 1 and 2 bed units, and sometimes you've got investors selling out from underneath you, and I think people are just generally finding if they can get into the market, then they'd rather be a buyer than a renter.
Yeah, I think it's just the amount that rents have gone up as well. So, the difficulty in renting, but then it's just the psychological amount that people are paying in rent now. It feels a lot. It feels a lot based on their incomes, right? And they're like, this just feels like wasted money. There is that mentality that rent is dead money and, you know, you've got to buy. And I think that speed of the jump and now the size of it and the changes they're going to have to make. Now they've had a little one bed and now they're going to have a flatmate, and the lifestyle impact of that, you know, to afford renting. And, you know, people are going, well, actually, now I want to make some compromises. I definitely want to get into the market. And so it's not just the difficulty in actually finding rentals. It's also just actually paying it and the compromises you've got to make, whether it's locations or living with, you know, a number of people that are forcing people to go, you know what, I want my own place. I'm sort of over this now. Rent is dead money. I really want to buy. And I think that's absolutely driving a lot of people to enter the market. And particularly when they're getting close to this sort of family stage, I think that desire to keep renting is really high right now. It's really low right now. That they really want to sort of get security and stability more than I've probably seen in previous years. It
does make sense. So let's finish off with a final news story of the week. So more 3-bedroom and larger apartments, neither Sweeney in the AFR. It was initially a piece about Mirvac launching its $2 billion Harbourside residences in Sydney next month. I mean, that's obviously a top end of the market launch, and there'll be quite a few 3 and 4-bedroom apartments across 48 floors. But it just seems to be a general trend. If you look at total unit commencements, they're way down from the highs, about 40% down from the highs. And I think that the market for new apartments generally is quite tepid. And developers are responding to this by tailoring for demand. And Mirvac is actually now delivering sort of more, or is catering to the growing demand for bigger apartments. There's a lot of cashed up downsizes. If you look at in Western Australia, Dempsey Developments, this is quoting from the piece, deliberately reduced the number of apartments to be offered in their newly launched project, Micah at Scarborough Beach. Originally planned for 65 apartments of 1 and 2 and 3 bedders, cut down to 21 3 and 4 bedroom apartments, which is actually larger than the average house. And they've been blown away with the response and demand, even with the high price point. So I guess this is sort of an ongoing theme at the moment. It seems that if developers are tailoring the stock to what people really want, or if it's a unit that can be sold for a premium price, then they can actually make these projects work. I think the problem is building sort of cheaper 1 and 2 bedroom units. Well, it's not very profitable at the moment, and construction insolvencies are still very, very high, as the latest data showed this week.
Yeah, I think this is one of the things I probably learned maybe 5-10 years ago when I was sort of looking at the property market and the makeup of our stock, like our housing. We've got 11.2 million dwellings, right? But what are they, And what do we need as a society? What's our sort of our demand, or what we, matching what we need and what we've actually built? And it sort of was very clear to me that, we absolutely had an undersupply of, bigger apartments. We absolutely built lots of studios, 1 and 2 beds. They made a lot of sense, building them to investors, overseas investors too. And the houses were bought by families and the apartments were investment properties for them. And then we just rented them out for younger people. That, I think what we've realized is that if you can't afford a house, what's your option? And it's a real lack of bigger apartments. Just it's not what developers have built. And so I think we're feeling the pain right now of misbuilding the wrong type of housing over the last, and properties over the last 20 years. And it's going to be really hard to play catch up because the demand is huge there. And it's coming at 2 ways now. It's coming from the family market and the couples market, particularly with work from home and kids, right? That want bigger apartments. There's just a real lack of those. And they do want something newer, right? They do want something that's, they've got the car parking, they've got the outdoor space and the communal facilities and things like that. We just haven't built them. You go around the world and they're very common, those type of family suitable apartment buildings. And they're just a big part of the overall dwellings, right? We just haven't got them. And the other side of the coin that's coming is that when the downsizers go, actually, this house is coming too much to maintain. It doesn't really suit it. We've got all these spare bedrooms. We could do with putting more money into our super and get a lock up and leave so we can go traveling with the caravan. They look around and they go, hang on a sec, I don't want to move into a 2-bed apartment. Like, where are we going to put everything? You know what I mean? And there's not many options for them. And so they're getting stuck in the house because they can't see a viable alternative because we haven't built options for them either. And so it's keeping people in our houses longer that obviously our younger generation wants. And so I think we're really feeling the pain right now at both ends.
Definitely, yes. For want of a better phrase, feeling the pain at both ends. So, well, let's finish it up there for this week. So I guess by the time this goes to air, the latest unemployment figures will be out, and no doubt the Reserve Bank will be watching those closely. The median market forecast is only for 4.2% unemployment, but if there's any softening, I guess that could change things. And also, I think the next inflation figures are due for release on the 30th of October. So I guess if we get weak figures in employment or inflation, that could sort of free up the Reserve Bank to be easing interest rates from 5th of November. But it feels to me at the moment like we're not quite there yet. There's a bit more this battle to be fought before interest rates can come down, most likely, I guess, in 2025. But watch this space. If you want to join us on the Rask community forum, community.rask.com.au, it's all free. There's a section there for property, but also if you're interested in business or ETFs or investing or anything else financial, there's plenty to check out there, all for free. And if you want to have a chat with me, Pete Wargent from Alan Wargent Property Buyers. And Chris, if people want to have a chat about mortgages and mortgage strategy, where should they go?
Just jump in the show notes here. There's a link. We'd absolutely love to. I think we're well over 500 now. I haven't checked for a while, but we've had a huge amount of people from the podcast reach out and speak to the team. So, just check out in the show notes and we'd love to chat.
Awesome. Well, have a super weekend, Chris, and same for everyone else listening. I look forward to catching you next week.
Thanks, Pete. Have a good weekend. Happy Sunday.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.